Well, hello everyone. Welcome to a fresh new week in the markets. I'm excited to be here this morning, and today we are going to talk primarily about verticals. We're going to do a little bit of trade management because I'm a firm believer that to be successful in the world of trading, you have to have a plan and trade your plan. And I want to start by pulling out a note that I took down yesterday. I was listening to Bloomberg Radio as I was trying, as I was driving around doing a little preparation. I'm heading for Vegas this week, folks. So wish me luck. But they were doing an interview with the a founder of Greenlight Capital, and he said if he had one bit of advice for trading, that it was when you're wrong to admit it quickly. And he said you're going to have, even if you're the best of the best, you're going to have lots of opportunities to do this, because how often are you going to be right? Maybe 65% of the time. I mean, if you're really phenomenal, and he didn't say this, I'm saying it, what if you were right 80% of the time? You know, you're going to have 20% of the time when you're not wrong. And when you fess up earlier and put a plan in place to get you out of that mistake, it's going to be far less costly. So we're going to do a little bit of trade management to just see if we've made any mistakes, because that's what good traders do. And then we're going to place a bunch of new trades. So, you know, business as usual here in the Trading a Smaller Account house. So my name is Barbara Armstrong. If you're new here, feel free to type a greeting into the chat so that we can welcome you to this community. If you're not following me on X, my friends, you are missing out. We also have the fabulous Ben Watson with us in the chat. He's a friend and a fellow coach, and he's doing over 20 some live events. So when you see him, wear sunglasses because his halo may be blinding. But yeah, he's here to answer questions in the chat today. So just know, as we, dive into the thick of things, that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab, and not all will qualify. Also, we use a lot of technical analysis in this class, but neither Schwab nor I recommend that as your sole means of investment research. We've been tiptoeing through the earnings season. We want to be aware of what's going on there globally with markets. There's been a lot of talk about tariffs this year, and for good reason. So we need to be aware of what's going on in the world around us and how it impacts the markets. We also want to be aware of the fundamentals. We're going to look at paper money today. We're using the paper money software application on the Thinkorswim desktop platform. It's where our portfolio is. Looks like, smells like, feels like real money, but it's not. Yeah. So, the great thing about that is that you can practice, become familiar with the platform, make sure you understand your trading strategies and have a plan in place before you consider trading in your live account. One of the differences with paper money is that short option positions will never be assigned early. Yeah. But we don't get to practice short assignments being assigned early in paper money, but we sure do get to talk about it. Okay, so my market overview is now very quick because, as the market opens 4 days a week, Kevin Horner does a market overview, and, they do a really great job on that. So you can go and watch that. Every day except Friday is archived. Yeah, and we've already talked about these other things that we're doing. Now, given that we have Ben here, and he's saying his halo may be a bit tarnished, but you know what? It just makes it easier to see him, doesn't it? I just want to bring up Schwab Coaching. If you have never been to this site, well, you're probably a seasoned veteran and you know the schedule already. But if you want to see our webcast schedule, you can just scroll down here. And, today's the 9th. We've got lots of great stuff happening throughout the day. Up next, Mr. James Boyd with technical indicators. If you haven't had enough of me today, I'm also going to teach the trading ETF class this afternoon. So feel free to join me at 4 o'clock Eastern for that. But that gives you an overview. But the reason I brought this whole thing up wasn't just for this, but also to talk to you about the in-person events. So Ben and Kevin Horner will be heading for Miami this weekend to do the first market drive of the year. And there will be quite the cast there. We're flying people in from all over the country. And it starts out with here's what's globally going on in the markets, to here's what's happening within the US. Here's how that's impacting the various sectors. And then it comes right down to if you look at a specific stock, how might you consider placing a trade given the context of what they've discussed throughout the day. So it starts big and goes right down to example trades on, an individual stock level. And I mean, these are fantastic events. I'm going to be at the one in New York at the end of June, so I'm excited about that. Of course, Ben is going to be at pretty much every single one. We provide breakfast and lunch and a great reception and cocktail hour at the end of the day. And if you want to learn more, if you're in Florida and would like to join us, it's not too late. It's at the JW Marriott, the resort and spa, and it's apparently a beautiful place. I haven't been to that particular location, but you can join us, and we would love to see you there. And if you want to bring a friend at the last minute, when you come, we can register someone on site, but for all the planning that goes into it, we're better to know that you're coming ahead of time. So yeah, somebody's saying come to Boston. Well, we're going to a lot of locations over the course of the year. So like we're going to be in New York, so you can head on up the coast and join us there. We're going to be in New York again in August, and then we're going to be in DC in September. I don't know that Boston is on the menu this year, but you can see where we're going through the end of the year. Okay. Yes, and I don't blame you. Like I would love to go to Boston. So if it's on the schedule, I'm there. Okay, so that's that. Let's get over to the platform and have a quick look at what's happening with the S&P 500 today. And man, this like from the end of February really through the beginning of April, it was tough times at the OK Corral, wasn't it? Like we came down over 20%, which I mean, that's already outside of correction territory. We're in bear market territory there. And the NASDAQ fell even further, but like, wow, we've had quite the comeback. We're not quite back to where we were in February, but we've come a long way. So APA is saying that event is closed. And don't say that I told you, like this is between you and the 230 some of us on the call. But if you show up, we can register you on site. So if you go, we will not turn you away. Okay, so there's that. All right. So that's the S&P. How about the NASDAQ? Similar looking chart, right? Although this pullback was, even more painful. And, there was just, a lot of wringing in hands. Chicken Little was getting exhausted, running laps around the yard. She's finally back, resting. But, a 25% pullback is nothing to sneeze at. Yeah. And, and now are we back up? We're back in the hood. We're back in that neighborhood. Yeah. Yeah. APA was saying that the Anaheim event was great. That was an advanced options workshop, a 2-day event. And I agree. I was there too. I think I came home. I probably learned as much as everybody else. And it's just one of the things that I love about the live events is, you walk out at lunchtime and there's whole tables of people sitting together that have never met one another before, excitedly showing each other things on their laptops, exchanging contact information. Like, it's they're wonderful events. And Ben and Kevin Hanks and Joe Mazzola were the key players and really did a great job. So our volatility index is now, back at 17, which I've got to confess kind of surprised me. I thought we'd be still up in this 20 area. So that just goes to show you, what do I know? And so I have to plan for the fact that I can be mistaken sometimes. And this is why it's so important not to trade what we think, but what we see. Because I kind of thought it was going to continue to hang out up here around the 20 to 22 level, and it didn't. And so you have to have a plan in place that can change. Yeah. Okay. And then what about indexes? So if we come over here, I brought up and this is just a public watch list. You come to public S&P sector indices, and this is what we've got here. And then I customize this. Now, under trade management mini sessions, if you're new, there's a 4-week and a 3-month thing. And there's a short video, if you scroll to the bottom of the mini sessions, on how to customize a watch list and how to customize your charts as well. But when we look at the last 4 weeks, we're back to communication services leading the pack, followed by technology, industrials in third place, and consumer discretionary just off the podium. And when things are really bullish, it's not uncommon to see, technology and consumer discretionary leading the pack and communication services. And we went through that period of darkness there where all of a sudden utilities was, like the it child. And, so they're still now in fourth place over the last 3 months, but they've fallen dramatically out of favor. We can see here in the 4-week number is, we're seeing this rotation. It's not continuing to climb. We're setting up a bit of a pennant pattern here with respect to utilities, but communications, look at that. It's on a tear. Industrials on a tear, hit a new high on Friday. And technology, back in business. Okay. So somebody's asking if there is a one-on-one training for Thinkorswim. And Ben, if you can find the link and post it, that would be great. But if not, go to the archived session, and in the bottom, in the comments, I always have a link for a one-on-one session. And so you can do a one-on-one training with a Thinkorswim specialist, and you get to pick what you talk about. They can share a screen with you, and it's really awesome. So the answer to that is definitely yes. And if you go to the archives and click on the comments, there will be a link there for a one-on-one. So that's pretty awesome that we do that. I would have booked one. I think technically you can book one every couple of months. But yeah, so the answer to that is you can do one-on-ones. But if you come to Trader Talks, and here, if you haven't subscribed to the channel, you'll want to do that. There's a link in the bottom right corner if you haven't already done that. And when you get to, Schwab Coaching Webcast, the Trader Talks, and come down to the mini sessions, if you're newer to Thinkorswim, so I'm doing a whole series here that are short. You can see like they're all, 5 minutes long or less on candlestick patterns. But if we scroll down to the very bottom, and they're organized by color. So if it's this turquoise, it's a Thinkorswim video. So there's one here on how to organize or set up your monitor tab, on adding scripts, on the option chain, using scans to create watch lists, and then how to do an OCO order, how to customize the watch list, all of that. Okay. And then there's a bunch of, because we're going to do some long call vertical trades today. We're also going to do some short put vertical trades today. And these are just quick videos to create an example, trading plan. And you can customize this however you like. And in fact, on the long call vertical, if you watch this, it suggests a target of 50%, of 50% profit. And we've kind of modified that lately, and we've been going for 25% instead. And the reason is because there's been so much volatility in the market. Somebody gets on X and goes a little nuts, and all of a sudden a stock is crashing, or the whole market is pulling back unexpectedly. And so we've just been a little more modest in our aspirations. And since we have taken that approach, things have gone far more swimmingly, shall we say. Okay, so that's what's happening in the market overall. And that's where you can find some additional, easy to access resources. Okay, so let's look at, let's start with CrowdStrike. So, if you're new to all of this and you're not familiar with the company, by the way, if you go to the Analyze tab, usually right under the ticker symbol, it'll say the company's name and it's a tech stock. If you want to look at what some analysts are saying, you can download these reports. And if you want to look at some fundamental information, there's a whole bunch here. Here's a 5-year trend. We can see earnings per share pulled back a little bit last year. In fact, it went from making money to losing money. But their book value is going up, their sales are going up, and you might say, ooh, well, that's, worrisome. The one thing I do want to point out is that past success doesn't guarantee how things are going to look in the future, does it? But here's just, an additional resource for you. But when we look at the charts on CrowdStrike, it kind of pulled back like a lot of things did. And then it had this diagonal resistance breakout, which, I jokingly said is what all the cool kids were doing for a while there as we started pulling our way back out. And it's really come back up pretty dramatically. And then we had this kind of diagonal resistance breakout. It came down to this support level. We're now on the other side of earnings. And, they were expecting it to be 28 cents a share in the hole, and it actually came out 73 cents a share, to the positive, which is a pretty big beat. But, post earnings, there could have been some bad news on guidance, but it pulled back down to this support level and now seems to be just kind of moving on up. So could we do something saying, well, it could be consolidating, but if we sold something around this 455 mark and did a short put vertical, might that work out? Well, it might and it might not. That's why position sizing is so important. And what were we looking at? Something around that 455 mark. And so if we looked at this 455, we go out 3 weeks. This is a pretty heavily traded stock. I mean, it's $468 a share, and it's already traded over 1 million shares. And that's part of the example trading plan. And then if we look at 455, does it have a tight bid-ask spread? Is it less than 10%? Yes. Does it have at least the number of 20 times the number of contracts we're looking at trading? Yes, because we're only going to do one spread. So if we get $1.67 for that, how much are we risking? Well, we're risking $5 minus the $1.67. So we take our $1.67 and we divide it by 333. That's interesting. So that's about a 50% return. And so if we say, well, our guideline is if we're in it for 24 days, we want to get at least a 24% return. That's potentially double that. And somebody's saying, I saw in the chat, can you put in 2 stops, one for the profit and one for the loss? And can you make it a stop market order? So we can, so why don't we? So if we wanted to do that, we could put in here a first triggers OCO. And then say, hey, if it gets down to 30 cents when we've got 80% of our max gain, we want to buy it back. Or if it gets to $3, we want to, jump ship. So we could do that. So why don't we? Why do we do first trigger sequence? Well, if it goes according to plan, we could be out golfing or walking the dog or, on a vacation or whatever, and it could hit our target and we could be out. But we want to be able to control when we exit to the downside. Now, you might just say, hey, if I'm down 100%, I just want out. And so you could put in that OCO order. The reason we don't is because part of our daily discipline in trading is to look at these every day. And so why do we put in this target? Well, because experience has taught me that sometimes things when the market first opened can be really volatile and there can be spikes. And so if it spikes and I get out for my target price, am I willing to fall on that grenade? Absolutely. But if it spikes down and then the market settles down and it comes back up, do I want to get nicked out, for 100% loss, before the market's had a chance to kind of settle in or that stock for the day? And so that's why on these verticals, we don't put in OCO orders. Okay. So but we are going to put in our target. And we're going to make that 28 cents. So I'm just taking the 17. And some might say, well, okay, that was kind of weird. So maybe this should be 30 cents now. Like we're live in the market. So we're just going to stick with this. We're going to make this good till cancel, confirm and send. How much are we risking? $345. Now we have a $25,000 account. Our guideline is we don't want to risk more than 500. So we might squeeze it and go to 550, but we're not going to 700. So, our position sizing rules are rules that we do not break. Now, our guideline is to get out when we've got 80% of our max gain. Might we break that guideline? We might. We might say, so if we come and we look at our current short put vertical positions, so, and it's interesting because, we've got, we already had one on CrowdStrike. So I was going to point this out because we now have two. And so we have one expiring in 11 days. And we have one expiring in the one that we just put on in 24 days. Is that a mistake? What do you think, guys? Is that a mistake? Yeah. Yeah, so it's actually not a mistake. So sometimes, with indexes, if we were bullish on an index, and we could go and look at the S&P 500, the SPX again, some might say, my weekly trade, if the market is continuing to go up, is I'm going to place a trade that expires in about 3 weeks or 4 weeks. And then the next week, if it's still going up, you'd put another one on and another one on and another one on. And so, although it may at first glance appear to be a mistake, it is not. And when we next meet next Monday, when we talk about this one again, then if this one hasn't hit our target, we would choose to exit. Okay. And, we were up pretty, we want to get out when it's at 32. It's at $1.05. So it's come part of the way. It's come at least halfway, but we're not quite there yet. And so when we look at these others, it's like, is anything close to 80%? And so when I look at Delta and I see, okay, it's at 74%. If this number was in the red, I'd think, maybe it's going to pull back and I need to just take the money and run. But because we're close, we may want to have a quick check. And so we do have this candle pattern showing up, this kind of doji. Now it's still a live candle, so it could change dramatically how this candle looks by the end of the day. But if we're up at 74%, well, let's do a little poll. So do we take the money? And this is on Delta. Do we take our 74% or wait? And so it has to be a binary question, yes or no. So do we take that or wait? And I'll go with whatever the majority says. I like to run a semi-democratic class. So go ahead and throw in your 2 cents worth and we'll go with the majority on that. Okay. So, and some, one of the questions is, and I love the way you guys are thinking is, well, with CrowdStrike, should we have done that because, now we're breaking our rule? But sometimes we'll place 3 trades on a stock. Like on Meta, we bought the stock and set a target. And look at that. It came up almost to hit our target today. How close did it come? Our target was 707. It came up to 705. But on Friday, we took a vote and we decided that we would take our money. And so on Friday, we took the money. So I could put my little golden orb around that one. And then we're waiting for another entry to maybe do another wash, rinse, repeat on that. Whoops, sorry. And do it again. Okay. What is this? Well, it doesn't want to draw a circle for me today. I don't know why. Okay. I guess now it's going to play. Dang you. Curse you, Red Baron. Okay. I give up. Okay. So 81% are saying take the money and run. Okay. So we're going to go back to Delta, and you can see we have an exit in place here. And so we are going to come down and hit cancel. So we wanted to get out at 11 cents. It's at 14. So we're going to cancel and replace that order and just hit the unlock button that says, okay, you want to get out now? It'll cost you 15 cents. We're going, yeah, no problemo. Okay. So now we've just managed 5 trades. Okay. Just with that one quick look. Okay. And we've done CrowdStrike. Let's look at Boeing. Now, we've talked about Boeing a lot this year. A lot of people have talked about Boeing a lot this year, haven't they? Yeah, Q Steve Miller, we're going to take the money and run on that one. So thanks to, all of you who weighed in on that one. So Boeing is having a good day today, isn't it? Look at that big fat candle. And so, what kind of candle pattern do you see on the chart that set up on Thursday and Friday? Because we had a stock, Boeing has been going like a whole lot of nowhere for, a long time, since July of last year until, the end of the first week of May. And then all of a sudden, and you could say, well, it started here. Well, yes, it did, but it had been, been in this range for quite some time. And then Thursday and Friday, we had this Harami pattern set up, which actually does not require confirmation, technically speaking, but it's now moving to the upside. But could we come back here around this 208 level? Because this is kind of our support level, right? And so if we come here, and if we're out here to July 3rd, and we wanted to look at the 208, well, if we did the 205 and the 200, now if we had done this Friday, we probably would have received a lot more for it. 75 cents. We're risking over $4, $4.25. Like, yeah, no. We're not going to get enough premium. It's moved too far. It's up $5.55 a share. So do we just go based on the probabilities and say, well, it's moving up? And somehow, some traders might like to do that. But I like to have as much protection as I can. And if you're a trader who likes to have as much protection as you can, and you look at this candle and say, well, hey, that went down to 208, this went to 208, that went to 207.90. If I can't be below 208, then I don't want to play. It's like, but it looks like an opportunity. It does. And this is where, sometimes say, when do you decide whether to do a short put vertical or a long call vertical? Like, now might be the time. Yeah. Somebody's saying bet it all on black. Ironically, I go to Vegas. I do not gamble. Not my thing at all. I like the Cirque shows. I like, it's, but yeah, not a gambler. There you go. Something you didn't know about me, something you didn't know. So we're at 216 now. So could we do a long call vertical? And given that our aspirations have been more modest of late, it's at 216. I wonder, could we do the 210 and 215 and still have an opportunity to make 25%? Well, let's see. And then it doesn't even really have to move. It just has to stay above 215. So if it's at 320 and we come over here and say, okay, 320 times a 1.25, that's $4. I'm still leaving $1 on the table. Am I okay with that? Totally. Because I'm saying if I can make a 25% in 3 weeks and it's legal, I'm not committing a felony. You know, I'm not just rolling the dice. It just has to stay above 215. You know, so even if it kind of consolidates, you know, what's the probability of that? Well, currently they're saying the probability of it being above 215 at expiration, because this is probability in the money, it's, you know, a 63% chance of it being above 50, above 210, and a 52% chance of it being above 215. And if it continues to go up, those numbers are going to continue to be up. Probability of touching, well, I think that number's a little off, you know, because it should be 100% because it's above it now. But I don't know. It's at 94. Who am I to argue? So if we're saying, okay, well, that meets our trading parameters. And again, we've modified it from that example trading plan where our goal used to be 50%. And so we're going to just say, okay. And again, could we put in an OCO order here, you know, and say, hey, if it goes down by 50%, I want out? We could. So why aren't we? Again, and this has happened to me in real life where I put in an order with, you know, I wanted to get out if it was 50% up or down. 318, old habits die hard. And then it hit my target. It hit my exit first thing in the morning, and I got whipped out for way more than a 50% loss. And then the market settled down and I wouldn't have been nicked out at all. And that doesn't have to happen often for you to say, you know, I don't think I'm going to do that anymore. I'm going to put in my target. And if I get nicked out in the first half hour of the trading day, and it's stunning to me how often in paper money this happens. Okay. So that we get out in the first half hour of the day. And then what are we going to do? We're going to look at these daily and say, hey, is it close to 50% up or 25% up or 25% down? And if it is, then we need to look at it. Okay. So, and again, do we want to go, how long does that take? Well, let's look at our long call verticals. Well, we have one, we just placed it. So all our other long call verticals are done. Okay. Let's go. Do you want to look at another one? Okay. Let's look at Delta. Oh, not Delta, Dell. We've already looked at Delta. So this one is kind of, you know, Dell Technologies has kind of been on the struggle bus, hasn't it? Like, you know, from November when it was trading at 147, it lost half its value, more than half its value. Oh, now my circle's going to work. Sure, be like that. Okay. You know, that's a 55% drop. But, you know, it set up this kind of, looks like this V pattern, and we saw a lot of these V patterns, and now it's consolidating. And, you know, the last earnings, it beat on earnings. And so it just seems to be settling in. And is this uncommon? No. You know, but could we say, okay, what if it continues to go sideways? Well, could we sell something here around this 108-ish level? And it's funny that it's a 108 because the other one was 208. So if we come out here, we've got 73 contracts, over a million shares traded, over 2 million, 10-cent bid-ask spread. So if we come and sell our vertical here, 20 cents, that's about a 25% return if we did a 107, 106, 38. So we're risking $1.62 to make 38. You know, that's how I kind of feel about that, to use a highly technical term. You know, it's a 23.5% return. So it meets our parameters just barely. And so if we look at this, might we want to be a little more directional? Could we do that same kind of thing, maybe a 110, 115 long call vertical and not be risking proportionately, you know, as much, you know? So, well, somebody's saying, why not an iron condor? We could look at an iron condor. But if you're overall bullish, you're more than likely to expect it to go to the upside, in which case your call side would get run over. We're not really in an iron condor friendly type of market. We're more bullish right now. But that having said that, we do have an iron condor on McDonald's. So we'll go look at that in a minute. But so if we did this 110, 115, let's look at that side instead. And so, you know, we've got 38 contracts, 750 to 770. Okay. And we don't have to do a $10 wide spread. We could do a $2 wide spread, but let's look at the 110, 115 to start. So 325, that's similar to the price on the last one, which was around 320. So 328 times 1.25, that'd be 410. So we're still leaving 90 cents on the table. So, and we're through both strikes. Like if we come, our break even on this is at 113.33. So it's $2 lower. And this is kind of I would say, a bullish to neutral strategy. If we wanted to make it more bullish, we could do, say, 115, 117, or 115, 120 would be really bullish. But at this, if our goal is to make a 25% return, do we think our probabilities are higher if we, you know, embrace this strategy and there's enough room here? And, you know, it's saying we've got the 115, we've got a 97% chance. Well, again, it's already through that strike. We have a 50% chance of it being at 115 or above come July 3rd. So if we say, okay, well, we're going to go with that single order, first trigger sequence, right click, create an opposite order. And then when it gets to 410, we want to buy it back. And again, the next time we meet, we'll look at this. We'll look at this again. And is this something that, as part of our routine, we look at daily? It is. Okay. And so this is, you know, has turned into that conversation of, like, when do we do a short put vertical versus a long call vertical? And sometimes we just want to look at both types of trades and then make a decision from there. Now let's come and have a look at our McDonald's. So we're up 2.78%. Wow. Okay. But, and this is no longer June 6th because we're past June 6th. We took that trade off, and our strikes are, the top strikes are the same. The bottom strikes, we moved up a little bit, and it's now June 27th. So we moved this up to 295. So that's representative. And so we want to make this June 27th. And you know what we're doing when we look at this, we just want this, ooh, look at this. Well, that was interesting. So what could we do when it's come all the way down to support, my friends? How might we manage this? How might we manage this? Well, we could look at this and think like, hey, have we got like 50% or more of our value out of the top short call vertical? So if we look at this, 119 minus 59 is what we got on the short call vertical, 119 minus 59. So we got 60 cents, and what's it now worth? 48 minus 24. It's now worth 24. We got over 50% of our, and we just, and let's look. I think we just placed this trade on Friday. We just placed it Friday. And so what might we do? What if you're thinking like a trader? Yeah, David is saying close the short call vertical because we've got 50% of our max gain and we're one trading day into the trade. And then what might we do? Well, if it bounces and this candle might indicate that it's found a support level, right? We've got this hammer. So we're going to come in and we're going to come back to our monitor tab. And we are going to come to McDonald's. Where's my McDonald's? Here it is. And we're going to cancel this whole order. Okay. Why did I do that? Because now I want to close this window and come to Mickey D's, and we're going to create a closing order, and it's going to give us a whole pile of choices. But what we want to do is just buy back the call side. So we're going to buy back the call side. We're going to make over 50% on that short put vertical in our one trading day. And then we're going to leg back into it. That's our intention. Okay. Now, what'll happen when we close out of that is all of a sudden it's going to look bad, on our monitor tab. Because it's going to look like, because the other side is definitely losing. Okay. So, it's now saying it wants 24 and a half. Okay. So we'll make it 25 cents. And that's in our iron condor. So today we've done some trade management. We've looked at our long call verticals, our short put verticals. We've shown how quickly we can manage that. We've discussed why we put in targets but not exit on those verticals. We've shown how quickly we can manage those. And then we did some management on our iron condor. We've also talked about subscribing to the channel if you haven't done that already. Following Mr. Watson and I in the Land of X, Ben Watson CS and Barb Armstrong CS. No, there's nothing like the real thing, but there are lots of people that would like to pretend they're Ben and I that aren't. I did post something on the weekend that said, hey, I want you to follow me. And because I have a lot of spammers hitting my posts on X, and I post a couple of times a day. So go have a look at that. And I will post another one later today or tomorrow. So if you missed the first one, you'll have another opportunity because I'm now limiting the ability to respond to those that I follow. So I'm sending out I want you to ask me to follow you. And that's why I'm doing that, to try and minimize the scammer content. So guys, have a really awesome day. Up next is Mr. Ben, no, it's not Ben, it's James Boyd talking about trading technically. You'll want to stay tuned for that. Thanks for joining me today. And I'll see you for trading ETFs. That one you have to join live. It won't be available in the archives. Take care, everyone. Bye for now.